top brokers in our agency. He's mentored many. He actually goes, his team and his agency goes by training by design. And so if you ever get an opportunity, beyond just this particular time right now, to listen to this man coach and teach is it is worth its weight in gold. Without further ado, I'm going to go ahead and bring up the gentleman that I love calling my friend, who we all call Coach. His name is Lance Christmas. And so we're going to go ahead and bring Coach Christmas up to the call. Coach, are you with us?
I'm right here, Mente. Can you hear me loud and clear, buddy?
We got you, brother. All yours.
Hey, appreciate those kind words, man. Super excited. Hey, look, guys, it's funny. Mente's talking about where you're from. I just literally touched down from Dallas a couple hours ago. I'm super excited. I've spent a week with some of the top brokers in our company and tons of information. I'm super excited to get this information into some of our agents' hands real soon. But this call tonight is going to be brief. Like Mente said, somebody probably invited you out that you might know personally, family, friend member, somebody you might have met at social media, somebody you could have met in line at a local Starbucks or something like that, and they talked to you about an opportunity. So what I'm gonna do, tell you a little bit about myself, my background, so you can know who Coach really is. Get into what we're doing, what's the buzz about our company right now, and then I'll get into how we get paid and how we educate families, and then we'll wrap it up. So as Mente said, my name is Lance Christmas, affectionately known as Coach. If you guys are on Instagram, you can actually follow me at Coach22407, my shameless plug there. But in any regard, I come from a real estate background. 19 years, I've been a nice, successful real estate agent, nice high six-figure income. I also coach high school football. I like to flex with my trophies in the background, if you can see that. I'm also married. I have 6 kids. And I'm just living, coach travel baseball as well. I say all this because if you can relate to me in any aspect, you're probably busy. I was working 80 hours a week in real estate, keeping a nice high six-figure income. After 19 years in this industry, which I absolutely love, I got to a point in time in my life where I was just feeling like I was on a hamster wheel and I needed a change. But I wanted to keep that nice high six-figure income, but not work as much. So I started looking for something that captured my same morals, my values and principles, and I couldn't find anything. But fortunately for me, a guy by the name of Bill Corman, who I was stationed with in the Navy, I actually spent 10 years in the Navy. He had reached out to me after me posting on social media, living my best life in real estate. He reached out to me and thought I'd be a good fit for the financial industry. So of course I asked him 2 questions. What's the name of the company and what do you guys do? So he said the name of the company is called the PHP Agency. Honest to God, I laughed at him on the phone. I thought it was a pretty corny name for a company. Knowing what we do, because he said it stands for people helping people, I love the morals, the values, and principles. Second thing he said is we help people make money, save money, get out of debt, and plan for retirement. I didn't want to help anybody make anything, save anything, or plan for nothing. I just wanted to work, hustle, get my money, and keep it moving. Then he said, ironically, we also teach people how to leverage their time. He had no clue that's exactly what I was looking for. So of course I was like, okay, show me what you got. So he starts talking to me a little bit about the company and what we do. And I'm thinking, okay, this is probably one of them scams, one of them get rich quick schemes, one of them deals out there. And then as he started talking about the income and things like that, I started thinking, this guy's a retired chief from the Navy, so he's got credibility. He's protected our country. He just walked away from a GS-15 job because he replaced his income from this company. So I said to myself, what if just a little bit of what Bill was saying had some truth to it? So I came on board with the company part-time. My goal was to prove it didn't work. And I made a mistake. In 14 months, I replaced my real estate income. So now, as Mente said, I'm the top broker here in the state of Virginia. I have agents across the country in 36 states right now, to going as far as Alaska. Yes, as Mente said, Alaska is one of the states that I love to claim now. We have Texas, Florida, Connecticut, all across the country. And just super excited about what our company is doing right now to change the narratives about people on the screen that look like us. So I know you're probably like, okay, you're cool, dude. What do you actually do? So what we are, guys, is we're what's called an FMO. It's a financial marketing organization. A real nice way of saying we market financial products on behalf of a bunch of Fortune 500, Fortune 100 companies you may have heard of. AIG, John Hancock, Mutual of Omaha. Those are just a few. Now, right now, those companies that I mentioned, they're suffering and they're shrinking, right? The average agent in this industry right now is 61, white, and male. Nothing wrong at all with any one of those three, but here's the first challenge. At 61 years old, you guys could probably agree with me. He's got 1 foot in, 1 foot out, probably thinking about retiring. The second challenge is distribution of those financial products. So here's what I mean. If a 61-year-old white male is the one talking to people about money, about finance, who's he probably talking to? He's probably talking to people in his same demographic. Because think about it. Most of us do business with people that look like us, act like us, and talk like us. The companies I just mentioned, AIG, Mutual of Omaha, they realize the same thing. They don't care about your age. They don't care about your background. They don't care about your skin color. All they care about is distribution of those products. And our company right now, the PHP agency, we're attracting that demographic. We're attracting women. We're attracting millennials. We're attracting Gen Xers. And most importantly, we're attracting minorities. So much so our CEO, he's a 42-year-old Assyrian and Iranian. Doesn't get any more diverse than that, right? His name is Patrick Bet-David. I don't know if anybody on the call has ever heard of Patrick, but Patrick Bet-David, he's got a channel right now, guys, on YouTube called Valuetainment. If you were to go to his channel, you find a lot of good content, but what you'd see is he's got over 3 million subscribers on his channel right now. It's the #1 channel right now for entrepreneurs. And what's cool, if you watch any of Patrick's content, you'd never know he's our CEO. He doesn't use that channel to try to recruit, try to attract business, nothing. He's just real passionate about entrepreneurship. And our executive team consists of, we have 2 African Americans, we have 2 Nigerian Americans, we have 3 Mexican Americans, we have 2 El Salvadorian Americans, we have a Puerto Rican Cuban American, we have a Filipino American, and then we have an African American Caucasian mixed. Our top income earner right now, guys, is a 35-year-old African American Caucasian female who's made over $2 million last year in this industry, which is unheard of. This is typically a good old boy whiskey and cigars. You probably agree, we resemble America, right? And so us as entrepreneurs, we get paid based off of the size of the problems we can solve for our clients. And so right now, we're solving 3 problems. The first one I just talked about is distribution. Let's take myself, for example. I'm a 48-year-old, I know 48, I know I don't look like it, thank you, but 48-year-old African-American male in the state of Virginia, right? I have a market that 61-year-old white male will have a tough time ever reaching. So because of that, AIG, Mutual of Omaha, John Hancock, etc., have paid me extremely, extremely well. That's problem 1. Problem 2, financial literacy. Think about this, guys. Where in America are we taught how money works? We're not, right? And so what happens is most of us will make mistakes in our 20s and 30s. Hopefully we can recover in our 40s to retire in our 60s, right? Hopefully. So we teach financial literacy here with a lot of our concepts, and I'll actually show you one here in a minute. And the third problem, real simply, is we teach entrepreneurship. Because think about it, in order to have a good, thriving business today, you have to attract 2 of the largest living generations right now. And they're different. They're called Gen Zers and Millennials, and they were born between 1981 and 2012. And they don't want to work 40 hours a week for 40 years to maybe retire on a third of what they were making. What they want to do is they want to have an impact on the community. They want to travel the world, but they also want to be paid what they feel like they're worth for their money and their time. And when I last looked, it's very hard to do behind a desk or a kiosk, right? So we teach entrepreneurship here with our mentorship program. And so what I want to do next, guys, real quick, I'm going to share my screen. I'm gonna show you two things. The first one is I'm gonna show you how we educate clients, right? I'm gonna show you one of our financial concepts. The second thing I'm gonna do, I'm gonna show you how we educate clients about the different types of life insurance that's out there, and then how you would get paid if you were an agent with our firm, and then we'll wrap up. Let me see. I see Quintella, Georgette. Give me a thumbs up if you see a PHP agency on here. All right, perfect. Thank you, guys. All right, so no matter how you make your money, guys, it's going to grow for you three ways. It's going to grow something called fixed, something called variable, and something called indexed. And just like life, there's pros and cons with everything. So now your fixed accounts, these are going to be things like your banks, your CDs, your money market accounts, heck, even mattress money, right? People got money in a shoebox up under the bed. The thing that we like about putting our money in this fixed account, real simply, it's safe. We know our money sitting in the bank is FDIC insured up to 250K. Now, the downside behind putting your money into this fixed account, real simply, is you're going to get somewhere between 0 and maybe 1% growth if you're lucky. Now, if you're a visual learner like myself, as I graph this down below, what you're going to see is very slow, low growth of your money. Probably not the best place to grow money long term. Wouldn't you agree? It doesn't even outpace inflation. Now, in the variable account, these are going to be things you're probably familiar with. Qualified plans, 401ks, 403bs, TSPs if you're in the military, maybe stocks and mutual funds, maybe some cryptocurrency and Forex, some NFTs, Roth IRAs and IRAs. Even the industry that I come from, guys, real estate is a variable account. The thing that we like about putting our money in a variable account is growth. We know we can win big. Now, the downside behind putting your money into this variable account, real simply, is you can lose all or you can lose a portion of your money, right? I've been an entrepreneur for almost 20 years now, and I've seen a couple downturns in the market, right? I've seen the dot bomb, right, in the turn of the century in 2000. Unfortunately, I've seen 9/11, right? We've seen the housing market crisis in 08. And then again, most recently, just the pandemic. So what you're going to see as I graph this down below, real simply, you're going to see the ups and downs, the peaks and valleys, and then the eventual crash. Now, in your index accounts, these are going to be things that we call a fixed indexed annuity. We call them FIAs for short, fixed indexed annuity, or an indexed universal life. We call them IULs for short, indexed universal life. Now, the thing that we like about putting our money in here, it's an insurance product and it's also safe, right? Guaranteed no losses. The downside behind putting your money in here is you're going to get somewhere between 0 and 9% growth in your money. 0 is your floor and 9 is your cap. And so when I say indexed, what I mean by that is you're mirroring something. And in this case here, we're mirroring the S&P 500. And you may or may not know the S&P 500 are those top 500 companies out there. The Teslas, the Apples, the Walmarts, etc. And so let's say this year coming up, the S&P 500 has a return of 20%. In the index count, we would get 9% because that's the cap. Okay, real simple. Now, let's say the S&P returns this year 8%. In the index account, we would get all 8% because it's under that cap. Now, let's say what's going on right now continues, right? Inflation keeps going up. Interest rates are starting to rise. We don't know what's going on with the pandemic and variants and all those different things. And the economy takes another hit and it goes down 38%. In the index account, guys, we lose nothing. It's a phrase we love to use. It's called 0 is your hero. And so if I were to graph this on the index account for you, what you're going to see is you're going to see it go up when the market goes up. flat line when the market goes down, up when the market goes up, flat line when the market goes down, and so on and so forth. So I'll ask you guys on this call, and you don't have to answer, or you can put it in the chat. It's up to you. But if you had a choice to put most of your money in one of these three accounts, which one would you choose? Would you choose fixed? Would you choose variable? Or would you choose indexed? Most of our clients that we educate will choose index. And here's why. Because in the fixed account, we love the safety of the fixed account, but not real happy about the slow, low growth. Wouldn't you agree? Now, in the variable account, everyone loves the growth, right? We love the growth of that variable account, but you're probably like me and not wanting to lose anything in that account. So we're not losing all or a portion, right? And now, and so in the index account, I'm good with the safety and I'm okay gaining up to 9% with no losses guaranteed. And this is referencing a gentleman by the name of Warren Buffett, right? So if you're not familiar with Warren Buffett, he's a financial guru. He's a decabillionaire. He's got a lot of books on money and finance. And he's got 2 rules of money. His first rule is don't lose any money. Keeps it real simple. His second rule is don't forget rule number 1. But here's the challenge that we're finding. Most of us are constantly losing money by having overexposure into that variable account. So what Warren Buffett's talking about is he's talking about something called principal protection. And so let me explain it to you here. So let's say I see Quintella. Let's say I give Quintella $100, right? Now you take that same $100 and put it into the stock market. The very next day, the stock market goes down 50%. Quintella, you probably would say we have $50, right? Real simple, right? I see your head nodding. Good. You follow me. All right. So now, great news. The very next day, the stock market makes a full recovery and goes back up 50%. How much do you have now? If you said $75, you're absolutely correct. What most of our clients say is $100, because most of us will equate percentage increase to monetary increase, and that's not necessarily the case. You're at $50, you're getting half of what you currently have, which is 25. And so Warren Buffett's not saying don't make money. He's just saying don't lose money. And so it's not how much money we make, but how much can we keep? And so when we educate our clients, I'll ask them, so Mr. and Mr. Client, do you currently have any fixed accounts, any banks, any CDs? A lot of the clients I talk to will say yes. Then I'll also say, Mr. and Mrs. Client, do you currently have any variable accounts, any 401ks, qualified plans? Majority of the clients we work with, they'll say yes as well. And then I'll ask them if we have any indexed accounts, any 401ks, any indexed annuities. A lot of the clients that we'll talk to initially will say no. And the reason I ask why not, it's because they were never educated, right? And so if you're on this call today and you say, hey, I agree with you, Lance, I've never heard of an index account before. So if you haven't heard about it, Stephen, think about your friends, your family, people you know, love, and trust. Do you think they know about the index account? Chances are probably not, and that's your value to the market. And so the next thing I'm going to do here is I'm going to go ahead and share with you, reshare my screen, and I'm going to show you guys how we educate our clients on the different types of insurance that's out there, and then how you would get paid being an agent in our firm, and then we'll wrap up. So, all right, here we go. All right, so let's say, hey, Lance, it makes sense. I'm open to earning a secondary income as a life insurance agent. And here's the funny thing, coming from real estate, never in my life did I think I would say I was a life insurance agent. But knowing what I know now, this is the second highest paid industry next to professional sports. You've got LeBron James, you've got Tom Brady, boop, financial services sitting right there on deck waiting to come in. And our company, the PHP agency, guys, we're different. We're just built different. We've had the likes of the late great Kobe Bryant come out and be a keynote speaker at our financial firm. Just most recently in Vegas, we had Iron Mike Tyson come out and talk to us. Announced just last night, we've got Neon Deion Primetime himself, Deion Sanders, coming out to be a keynote speaker, along with E.T., the hip hop preacher, Eric Thomas, coming out to Daytona in February in less than 4 weeks, right? We've even had Little Chocolate drop himself, Kevin Hart. So think about this. What insurance firm do you know that would have Primetime, right? Deion Sanders, Kevin Hart, Kobe Bryant come out to our firm. So like I said, we're just a different type of company looking to attract different types of people. So say you have a client that's open to some insurance. So it's the first type of insurance we're going to educate them about is called term. Term is very simple. It's a temporary thing. It's like renting. So it could be for 10 years, 20 years, or 30 years. So let's say we're going to get a 30-year term. And let's just say we have a 34-year-old female. So she's going to be covered from the time she's 34 till she's 64 with a $500,000 death benefit. And so here's what happens. AIG, Mutual of Omaha, they will say, Marlena, thank you very much for introducing us to someone we would have never met. We're having a tough time reaching your market. Because of this, we're going to advance you 12 months of the premium. So 50 times 12 is $600. At the average contract rate, Marlena, you make $300 for just an hour to 2 hours worth of work. If you guys are hearing my voice right now, where in America can you get paid $300 for an hour's worth of work? Legally, legally, I had to put that in there, legally, right? So that's great for us as the agent. What's in it for the client? They now have a $500,000 death benefit and they leave a legacy and not a burden. No more fish fries, no more GoFundMes, no more passing the plate, right? And so the cool thing about it, it's cheap. It's $50 a month, right? Now, the downside to this one is it does expire. So when she turns 65, there's no longer any coverage there. And so as I'm educating my client, I'm going to ask her, are we healthier in our 20s and 30s or 50s and 60s? Most clients are generally healthier when we're younger. So this may be a good fit initially, but not a good fit long-term. The next type of insurance that I'm going to go over is called ROP term. It's still a term, but here's the difference. So let's just say Quinella is, she has car insurance with Geico, right? I hope Quintella, I hope you have car insurance, you're not riding dirty, but let's just say you've got Geico, right? Geico calls you up today and says, hey, we've got this sweet deal going on right now. If you sign up with us today, we're going to cover you like normal, right? Fix your bumper, fix your windshield, get your rental car. But if you have no accidents over the next 10 years, we're going to refund you all the money you paid us. Everyone on this call will probably go ahead and sign up for that, right? But you guys know as well as I do, Geico doesn't have that, right? They don't have it in car insurance. We do have it in life insurance, and it's called ROP term, which is return of premium. Now, it's still a term, so it's going to go for 10 years, 20 years, 30 years. Now, we have that same 34-year-old female from the first one that's now going to be covered for 30 years with a $500,000 death benefit. And so here's the cool thing. AIG says, Stephen Walker, thank you very much for introducing us to someone we would have never met. We're having a tough time reaching your market. So because of that, we're going to advance you 12 months of the premium. 12 times 100 is $1,200. At the 50% contract rate, average rate, you're going to make $600, Stephen, for an hour to 2 hours worth of work. Now, that's great for us as the agents. The client now has as same coverage, and now they've been paying on this for 30 years, $1,200 a year. They get a full refund of $36,000. Now, think about this. Did you know you could use refund and life insurance in the same sentence? Most people will say no. And so if you're the ones that saying no, think about it. If you don't know about this, what about your friends, family, people you know, love, and care about? Do you think they know about this? Again, that's your value to the market. Now, the downside to this is it also does expire. And so this may be a good fit initially, but not a good fit long-term. Now, the last one I'm gonna go over as we start to wrap up is, let's just say John Manchester, let's just say you're being responsible. You wanna get life insurance. How long would you probably want that life insurance to last? Most likely, you probably want it to last until you pass away, so you want it for your life. This one here is a permanent life insurance, the UL IUL. It's also the same one I just went over in the 3 Ways Money Grows in that index account. So now we have that same 34-year-old female who has a $500,000 death benefit. And so, John, here's your value to the market. National Life Group says, thank you very much for introducing us to someone in your demographic we would have probably never met. Because of that, we're going to advance you 12 months of the premium. $250 times 12 is $3,000. At that average contract rate, John, you make $1,500 for an hour to 2 hours worth of work. Think about this. Most of us hearing my voice right now know we've got to clock in and clock out for 2 weeks at a job we probably don't even like to make $1,500, right? And so here's the funny thing. That's not even what impressed me. If you remember from the beginning, I talked about I was looking for a way to leverage my time, right? So what I'm talking about is something called residual income. If you don't know what residual income is, real simply, you do the work one time, you continue to get paid long after the work is done. And so one of our carriers, American National, they're going to pay us a 4% bonus on the annual premium for the life of this policy, Kyle. And so 4% of $3,000 for life is $120. Now, I know that's not a lot of money, but think about this. That's just one client. Imagine helping my family. I'm a family of 8. Now imagine helping 2 and 3 and 4 families a week, times months, times years. You're building up that legacy of residual income. Great for us as the agents, right? So now here's the client. That 34-year-old female has a permanent policy that's never going to expire. She's also growing up a cash value that I mentioned in the 3 Ways Money Grows in that index account, between 0 to 9% growth. There's no bank account out there that can guarantee you up to 9% growth. You're also growing tax-free income, right? That tax code that you see right there will allow you to grow money in that index account and access that money with no penalties, no age restrictions, and tax-free. And then lastly, it comes with something called living benefits. I like to call it the new type of life insurance. So if I was to ask Kyle, hey, Kyle, explain life insurance to me, you probably would say, if I die, somebody gets my money, right? Real simple, right? Now, here's the new type of life insurance. If I die, somebody gets my money, but if I become critically injured, chronically ill, or terminally ill, I can access a portion of that $500,000 while I'm still alive to cover medical expenses, living expenses, cancer treatments, all tax-free. Because think about it. Do you plan on having a heart attack or stroke or cancer anytime soon? Probably not. But we're one catastrophic event away from bankruptcy. So imagine having access to up to $500,000 to cover those living expenses while you're still alive. Did you know about the new type of life insurance before hearing me tonight? Probably, yeah, probably not, right? So think about this, Kyle. If you didn't know about it, think about your friends, family, people you know, love, and trust. Do you think they know about it? And if not, who's going to teach them these concepts? So real simple. So as I wrap up, guys, we fall into 3 camps here. Real simple. The first camp is I have some questions, right? The person who invited you on this call tonight is, as soon as we disconnect, is going to call you. Answer that call. They're going to physically call you, not text you. Answer that call. It could change your life, right? So once you get those questions answered, you'll fall into two other camps. Camp 2 says this: what do I need to do next? This makes sense. I'll go over that in a second. The third camp, real simply, says, hey, this makes sense. I'd love a free no obligation look at my finances. I'd love to know a little bit more about that tax code 7702. When they call you, pick up that phone, they can schedule you a free consultation, right? So if this is something you can see yourself doing with us part-time, here's your next steps. Real simple. This is a highly regulated industry, right? So you have to be able to pass a background check. No felonies, no misdemeanors tied to money. If so, you could have a tough time getting a license, and some of our carriers, they may not touch you with the 10-foot stick, right? And then and the next steps after that, if that's okay, is in the future, you'll have to get licensed in the state that you're going to do business in. And when Mente started the call out, there's people all over the country. And so licensing fees are going to vary. They're going to be somewhere between $80 to $125, depending upon your state. We have a licensing coordinator that'll help you get that taken care of in the future, right? And then next steps, real simply, is getting started with our firm tonight. It's a one-time lifetime platform fee of $199. And what's cool for $200, what you get is you get corporate access to our home office in Addison, Texas. It takes care of agency payroll. We get paid twice a week, every Tuesday, every Friday. So tomorrow's payday. Every Tuesday, every Friday. All right. It also takes care of compliance, which is super important in this industry. It also takes care of licensing support. And what I mean by that, the companies that I mentioned earlier will typically charge you to connect with them. Once you're part of our platform, that's all taken care of for free. This also takes care of any kind of special events and trainings that the company may offer. And we also have local and Zoom trainings that are done 2 to 3 times a day, Monday through Saturday, and once on Sunday. All of this time is available to you because we know that people are doing this part-time. It allows you to plug and play based off of your schedule. And last but not least, we have a tech-enabled back office, fintech technology called Bamboo that updates every 3 seconds. That will allow you to see your agency as it grows. It'll allow you to take advantage of policies and procedures. What I'll do real quick, I'm gonna share my screen, kind of show you what we have here. All right, so you guys, can y'all see my screen? All right, see thumbs up. And so right here, if you look in our back office, you can see we have strength and selection with some of the carriers that we have, all top rated, Fortune 500, Fortune 100 companies. And then also you can see up here, you can check your agency as it grows. You can check on different reports and tools. And then most importantly, we have on-demand training available to you. This on-demand training, there's 21 on-demand different videos that you can go in and look at your leisure outside of your time and effort. And as you can see, these are some of the conferences that we were at. This one right here that you'll see, this is the where Kobe Bryant came out and talked to our firm. And as you can see, we're a different type of company. This looks like this doesn't look like your typical insurance firm. And so with that being said, guys, pick up the phone. Whoever invited you out is going to call you right now. Answer that phone, get those questions answered. and I look forward to seeing you guys soon. Mente, thank you very much. Have a good night.